Good morning, everyone. Good morning. Thank you all for being here. My name is Andre Gooden, Director of the Chamber and Chairman of the Jamaica Conference Board. I welcome you to the release of second quarter business and consumer confidence results for 2026. Special recognition to our sponsor, GK Capital Management Limited. And good morning to the team from GK Capital here present in their numbers. Thank you for being here. Welcome to the members of the Chamber, past President Larry Watson, CEO, Lloyd Distant, Ian Nita, First Vice President Martha Miller, and of course, the affable Keith Collister. Happy to have you here. Special welcome to all the representatives from other organizations, special invited guests of GK Capital, representative from the Jamaica Broilers Group, and of course, good morning and welcome to our, Larry, you like this one, a high-octane panel, led, of course, by Executive Chairman, Market Research Services Limited, Dr. Don Anderson. Nice to have you, sir. Mr. Jeremy Barnes, Managing Director, Future Energy Source Company, more commonly known as FESCO. Mr. Jamie Ogilvie, Vice President of the Chamber and also Vice President, wearing today the hat, the Jamaica Broilers Group, HiPro. And of course, Chairman of Petroleum Corporation of Jamaica, Mr. Mitre Siaga. Please welcome my panelists. Thank you. So, this quarter just ended. I have found to be unusually busy, with several things happening at once that can influence both business and consumer confidence. We can start with the World Cup, even though the World Cup is not in this quarter ended, but the heightened commercial activity, the big money spent by advertisers, global advertisers and local, and the places of entertainment, etc., which seem to have done quite well. And if you look at the attendance at the stadia across North America and Mexico, it really seems that this was a huge commercial success, and Don will hope maybe we can see some of the reflection of those numbers in the next quarter. So that is one thing. The continued global conflicts, supply chain challenges, of course, fuel costs, which we will speak about a little bit shortly. We have seen businesses sort of adjusting their models in an attempt to continue to stay afloat in their businesses. We've seen consumers, really bearing the brunt of the burden. But we're all still surviving and are still finding ways to survive. The ongoing drought, I haven't heard much about that yet, statistician Larry, and I'm sure that at some point we're going to hear about the food supply issues that are evident as a result of the drought. But we have, really a mixed bag. I mean, the Jamaica Stock Exchange has shown some signs of resilience in the first half of the year with double-digit growth in some of the indices. We have two listings in the quarter, one a significant size on the main market. We have also seen the continued island-wide construction boom, and it seems ongoing, even ahead of the much anticipated NARA rollout. So it seems that we had a lot of moving parts this quarter done. I don't know if it is greater than before, but it's very evident to me that there's a lot of commercial activity happening and a lot of effect on both business and consumer confidence. So we wait with bated breath to hear what happened with the business and consumer confidence indices in the second quarter of 2026. Thanks again to our sponsors for being here, and we look forward to an interesting and enlightening discussion. Okay, first item on the agenda is to have our general sponsor, GK Capital Management, represented by Mr. Jermaine Walton, to come and move the sponsorship remarks. Please welcome Jermaine.
Members of the panel, fellow attendees, members of the media, and those joining online on YouTube and Zoom, good morning. On behalf of GK Capital, it's my pleasure to welcome you to today's Business and Consumer Confidence Indices Reveal. And partnership with Jamaica Chamber of Commerce has always been built on one simple belief. Good decisions begin with good information. Right? That's why we're here to listen to these great guys today. Confidence is not simply a feeling, but an economic indicator, as we all know. It influences whether families purchase homes, whether businesses expand operations, whether investors deploy capital, and ultimately whether economies grow. Today, that confidence is being tested by forces well beyond our shores, right? So we're seeing what's happening overseas. Of course, a few weeks ago, many panelists would have believed global energy markets were beginning to stabilize, but then renewed geopolitical tensions have once again reminded us how interconnected the global economy has become. For Jamaica, which imports virtually all of its petroleum requirements, this matters. Higher oil prices don't simply affect motorists filling their tanks. They ripple throughout the economy, influence electricity costs, and increase transportation expenses, affect food prices, raises manufacturing costs, impact tourism, and ultimately shape the confidence of both businesses and consumers. That is why today's discussion, fueling confidence, how energy costs shape business and household behavior, could not be timelier. At GK Capital, we believe data is no longer a competitive advantage. This is simply the ability to interpret data is. That philosophy continues to guide the work we do every day, from our research team, market intelligence, and investment advice, to the recent launch of our GK Intelligence. It's a great tool. Karim, glad to say that. Our AI-powered investment research platform designed to make high-quality market insights more accessible to investors. Because informed investors are more confident investors. And confident investors help to build stronger businesses, stronger capital markets, and of course, stronger economies. This morning, we are privileged to hear from an outstanding panel representing manufacturing, energy, market research, and industry. Their perspectives will help us better to understand not only challenges posed by rising energy costs, but also opportunities that innovation, efficiency, and strategic planning can unlock. I encourage everyone here, online and in person, to engage fully in today's discussion, ask questions, challenge assumptions, and share ideas. Because confidence grows through informed conversation, not just, of course, guesswork. Finally, I wish to thank the Jamaica Chamber of Commerce for its continued partnership and commitment to producing one of Jamaica's most important measures of economic sentiment. Thank you to our distinguished panelists for sharing their expertise, and thank you to everyone for joining us this morning. I look forward to what promises to be an insightful and valuable discussion. Thank you.
Thank you very much, Jermaine. And thanks for reminding us about the rich history of the data. And Don always leads off his presentation with that, but just to say that we have data from 2001 on business and consumer confidence. And for those of you who want access to that information, we can certainly get it to you. Just contact the Chamber's office, and we're happy to welcome new subscribers at any time. Very rich, very important data on which decisions are made, can be made. So thank you again, Jermaine. And now, without further ado, welcome Dr. Don Anderson, Executive Chairman, Market Research Services Limited, to give us the presentation of the second quarter business and consumer confidence indices results. Please welcome Don.
Thank you very much, Andre. Good morning, everybody. It's always a privilege, really, to be able to present the findings of our Business and Consumer Confidence Survey. And Andre made reference to the fact that we have been conducting this study from 2001. I just want to probably put it even more succinctly that this represents probably our 100th presentation of data. All right. plus or minus 1, right? Margin of error. So, again, it's always a privilege, always a pleasure, and we have some very interesting data, we believe. We always think it's interesting because, we're so thrilled with having data that we can look at and analyze and massage and get views on, But here we are. We're going to start, as usual, with the basic background. We target 600 households island-wide in a nationally representative sample, and we were able to get back to norm in this particular period because prior to that, with the passage of Melissa, we had challenges with the full sample. We managed, but we're back to full sample now, and we interviewed just over 600 persons, 610 persons to be exact, in a nationally representative sample so that we could project upwards to the full population. And then we did 116 firms across the wide spectrum of the business types. So the data that we are representing, we're confident that it represents the views of consumers on the one hand and views of the business sector on the other. So as usual, we look at the consumer first of all. And what did we find in the second quarter of 2026 was that consumer confidence fell by just 2.3 percentage points. If we look at that pattern, and you can see this particular line graph here, talks to you in terms of 2001, and we can see all of those peaks and flows and so on. And the typical peaks that you see there, are typical of election years. And I make mention of that because in a later chart, we will talk we'll see exactly what's happening in the last year. But those peaks represent promises that are bought into, and the sharp fall off promises which are not fulfilled. Essentially, that's it. All right? So we can see. Happily, between 2050, 2011, 2019, thereabout, we saw a kind of moderation of that sharp peak, and we've seen a leveling off, and that's because, to a large extent, we believe, from a political perspective, the consumer has become a lot more savvy, and they don't necessarily respond to the kinds of promises that are made and promises that are not kept. But the key factor here is that consumer confidence fell by 2.3 percentage points in the last quarter. So what we want to do is to use 6 charts to try to understand the reasons for the fall in consumer confidence. So there are a number of indices that generate the kind of results as to whether or not confidence is going up or going down. Confidence went down in the second quarter of 2026, and the following are the factors that accounted for that fall off. What about the views on current business conditions? We can see the middle chart represents the current period, quarter 2, 2026. But when we look at it from, say, quarter 2 of 2025, and then first quarter of 2026, we can see what is taking place. What is happening is that fewer and fewer persons are considering that the current business conditions are good. So we move from 22.4% in the second quarter of 2025 to 16.8% in the first quarter of 2026, down even further to 16.2% in the second quarter. So consumers are becoming, cautious, conscious of challenges, wary of what's happening down the road, and what we find is that they have a less positive view of current business conditions. That's the first factor that contributed to the fall-off in consumer confidence. What about the current job situation? We make the point time and time again that consumers have never felt that jobs are plentiful, never ever. There's no time in the 25 years that we've been doing this study that consumers have felt. There's a very pessimistic outlook as far as the consumers are concerned when they think in terms of current job situation. So in the second quarter of 2025, 14.9% felt that jobs are plentiful, which was a pretty high number compared to the pattern over the previous years. That fell to 8.2% in the first quarter of 2026. Well, we had Melissa intervening in October, and lots of people across the island, even though we were heavily impacted in a couple to the west of the island. But it was a nationally felt impact. That fell to 43.4%. Happily, 8.2% in the first quarter of 2026. We're talking about those who feel that jobs are plentiful. And that fell even further to 7.8% in the second quarter of 2026. So consumers are definitely feeling wary about their own situation. Jobs are not plentiful. They're becoming, as far as they believe, even less so in the second quarter of 2026. So what are their views on business conditions going forward? How do they feel? How do they feel about business conditions in the next year, for example? We can see the same pattern. 40.7% in quarter two of 2025 felt things were going to get better. That fell to 37.2% in the first quarter of 2026, and even further to 33.5% in the second quarter of 2026. So again, these are the factors contributing, influencing consumer confidence. What about expected jobs? We notice there's a fall-off consistent with the pattern that has been setting in all the variables that impact consumer confidence. Fell to 31.5% from 32.1% in the first quarter, which is a fall-off from 39% in the second quarter of 2025. Second quarter of 2025, we're brewing, election is brewing, So there's a very, very consistent kind of behavior response from consumers. Election is coming up, people are gearing up, people are becoming very optimistic about situations. That's the second quarter of 2025. 39% believe that the situation will get better, okay? That fell to 31.5% in the second quarter of 2026, a fall off of 7.5 percentage points. So what's interesting is that when we ask them about their own personal financial situation, 53.8% in the second quarter of 2025, up slightly to 54.6% in the first quarter of 2026, surprising against the background of Melissa, but fell back to 53% in the second quarter. Not much change, all right? But consumers are expecting their situation to get better, increase, obviously. So you want us to wonder whether it's an expectation or a hope, because against the background of how they perceive the economy, clearly consumers are still buoyant about changes to their personal financial situation, okay? So how does this impact plans to purchase? We notice that in the case of homes and vacations, that number is actually not particularly good. But when you think in terms of vehicle purchases, that moved up from 25.4% in the first quarter to 26.4% in the second quarter of 2025. And we put that down to a situation where the dynamics in the marketplace are really, really sharp. There's a lot of marketing activity. Lots of the Chinese cars are coming in, and there's a buoyant kind of environment regarding vehicles. And this is what is seen here, that against the run of play, so to speak, 26.4%, more than in the first quarter, intend to buy a vehicle. But for homes and for vacations, we realize that those are falling. And therefore, we can see where the emphasis in terms of consumer spend is likely to be. So this is a very interesting new chart. And when you look at that gap in the third quarter of 2025, ask a simple question: what accounts for that? Election period. So we can see where people are very, very positive. They think it's going to get better. 51.2% in the third quarter of 2025. That's the month of the election. When we go all the way across to the extreme, which is the second quarter of 2026, we can see where the lines have crossed. And people are less hopeful about the economic situation. So when you put all of these factors together, it clearly says that consumers are not as confident as they were before. Not as confident. And these are the factors that have accounted for that change in consumer confidence. This is a chart which the data hardly ever changes because people are concluding that prices are going up, prices were higher last year than before, and another factor which is contributing to the impact that the consumers are feeling in their own environment. Probably one of the more worrying charts is this one. Because year to date, we depend significantly on remittances. Remittances have been a solid performer in terms of shoring up the disposable income and the ability of people to survive. Why? Because We get obviously a significant amount of remittance inflow into the country. Most of it goes to the middle and lower income for obvious reasons, not exclusively so. And what they do is to use that to basically meet their daily household expenditure. So it's a very important factor in people just living day to day. So far, remittances are reporting a 3% fall off compared to what we thought was a growing improvement. 30% in 2025 received remittances, nowhere near the peak of 38% in 2016, but beginning to pick up. What we've found so far for the year, remittances are down by 3 percentage points. If that continues, it will be a worrying factor. So from a perspective of the consumers, we believe that consumers are likely to face headwinds. They see headwinds up ahead, and therefore one has to brace for how they are going to respond to what the businesses are saying. Okay? So rising electricity costs on households. We have, 60% of the households indicating that they have had some significant impact, between moderate to severe impact, that they're obviously being challenged by the rise in electricity cost on their household expenditure, and this is an important factor to note, very important factor. So what changes have they made? How have they responded to the rise in energy costs? Well, 51% say we're reduced our electricity usage. 31% said they're using fewer appliances, so they're applying a range of solutions. 29% said they purchased energy-efficient appliances and bulbs. 21% have made no change. But the majority have responded in very strong ways to the rise in energy costs. Very important factor. We're plotted down to 6 percentage points. They're a number below that, but we thought we'd pull the top 9 or 10 reasons or changes that people have made in their household as a result of rising in energy costs, right? So what do you think are the best measures to help households manage rising energy costs? So there are no projecting outside. How do you think government and others should respond to help households manage rising energy costs? People believe that you should lower electricity rates, 56%. Is this realistic? 38% said more stable fuel prices. 28% said lower taxes on energy-efficient appliances, encourage us to be able to acquire more. 27% said easier financing on solar systems, so people are obviously thinking in that direction. Expanded renewable energy programs. Consumer education. People believe that there's a need for more education to alert them, to make them more aware of what to do. So here are the thoughts that they have as to how they could be helped in meeting the rise in energy costs. So far for the consumers, it's interesting therefore now to look at what the businesses are saying. Remember, we interviewed 116 businesses across the country, and what has happened is that there's been a slight increase in business confidence. 2.3% increase in business confidence, Q2 over Q1. But we'll recognize from the next chart that even though there's been an increase in business confidence in the second quarter, business confidence is still lagging behind 25 and beyond. Okay? But that's the pattern over the years. It's businesses aren't as erratic, so to speak, for want of a better word. We can see there's a jagged edge to each of the years, but not another peaks that you saw consumers responding to political pressure, political promises, etc. So far, for 2026, first 2 quarters, understandably, Melissa in October, severe impact on businesses, business confidence at the moment, year to date, first and second quarter combined, is 125.8 index compared to 136. So we were seeing a kind of even flow from 2022 post-COVID, 137, 139, 139, 136. So we're saying, that's kind of normal. Post-Melissa, business confidence was down. So whereas we see an increase in business confidence in the second quarter over the first quarter, again, we're nowhere back to where we were prior to Melissa. So, talk to us, therefore, as to the factors that influence business confidence. Business confidence is up by 2.3 percentage points. What are those factors? When we look at the current conditions, businesses are saying, you know, my profit level is better than expected. Now, we don't want to take that in isolation because it obviously has to be compared against something else. So when we had looked at the first quarter in 2026, business confidence, 14.8% of the businesses said profit was better than expected. That's moved to 19.1% in the second quarter. What it is, of course, a recovery, a beginning, a resilience coming to the fore. And people are now saying, yeah, you know, I'm getting back to where I would like to be. And 19.1%, which is a 4.3% improvement on the first quarter, are now saying that their profits are better than expected. That's against the background. It always has to be contextualized. All right? So what about investment expansion? One of the things that we've gauged to a large extent on the bullishness of business sector is how their willingness to invest. Where we were in the second quarter of 2025, 61%, getting back to the kind of bullish environment, bullish kind of, yes, we're ready to invest. It fell to 50.8% in the first quarter of 2026, post-Melissa. It's beginning to pick up. 51.3% now believe it's a good time to invest. So even though those numbers fell off from the second quarter of 2025, we can see that businesses were still of the opinion that it was a good time to invest. Half of the businesses felt so. And that, again, is what was maintained with a slight improvement this quarter over the first quarter from 50.8 to 51.5%. So we can see businesses trying to pull themselves back. So what about your firm's finances? Very interesting data. 68.7% of the businesses say, you know, I believe my firm's finances are going to improve or are beginning to improve. It is up from 62.5% in first quarter, not back to the 70.8% in the second quarter of 2025. So businesses are seeing themselves bouncing back gradually, not dramatically, but gradually. What about the profit situation? Kind of on par quarter to quarter, 61.7% in the second quarter of 2025 said they expected to improve. That fell to 60.2% in the first quarter of 2026, back up to 63.5%, the highest in the last year. That they said they expect their profits to improve this year. So businesses are very optimistic. I note the question that is being put to me, and we will address that in due course. What about the economy? So it's very interesting that against the kind of optimism that businesses are showing in terms of their own situation, that they're a little bit less than optimistic about the economy going forward, and that seems to be a little bit of counterintuitive. 44.1% said in the second quarter of 2026 that they expected the economy to get better. That fell slightly to 43.8% in the first quarter of 2026, and further by 3 percentage points against the background of the optimism that they're showing. 40% felt, well, you know, less good about the economy. 40% said the economy would get better, but notice that the majority didn't think it would get better, if you want to look at it from that stark way. But 40% said they expect the economy to get better, which is lower, and the lowest of the three periods that we're looking at here. And this is against the background of the optimism that they're showing in terms of their own profitability and in terms of how they expect their businesses to go. So very interesting kind of dynamics there. Again, this is something that we have seen generally, prices expected to go up. They have been facing increased prices of inputs, etc., and they do expect, we can see almost every business say that they expect prices to go up in the coming year. This is what is actually shown here. I was one step ahead of myself, but 94% of the businesses say that they expect prices to increase, and therefore, you know, businesses talk about passing on prices to consumers, or can they not pass on prices to consumers? So this is going to be a worrying concern for both businesses and consumers. Okay. Very interesting data that we started to plot maybe about 10 quarters ago, and this is the intention. Which sector intends to increase their capital investment, to make more investments as we go down the line? We can see that what stands out is that 69% in the farming and agriculture, including mining and quarrying, that say that they intend to invest more in the coming year. This is followed by a new segment that we introduced, education sector, human health, social services sector, 67%. We can see jotting out those that are the areas, and the financial institutions clearly will want to look at all of this and say, okay, well, here's a sector that I need to be targeting. So we're talking about clearly farming and agriculture, education, human health, social services as the ones that are clearly out there with plans and strong plans apparently to increase their capital investment in the next year. Okay. So having said that, there are obviously some factors that are impacting their decision to expand their businesses. And so what are those factors? This is a totally spontaneous, open-ended question, and we got the responses back from the firm. We said, well, what are the factors impacting your decision to increase your businesses? High input costs, 25%, and we give you an indication as to what change that has been over the last period. So it's a 9% increase in the number of businesses that believe that high input costs represent an important deterrent or kind of handicap, so to speak, in terms of expansion. Lack of funding, access to finance, lack of revenue, cash flow, low consumer spending, okay? Very important factors are here where the businesses are speaking about the consumer's ability to meet them. And we can see all those factors going down the road. But the key factor is the high input costs, obviously raw materials, etc. Lack of funding, access to finance, and lack of revenue or cash flow is the key factors that are impacting decisions to do greater investment. So, same question we asked of the consumer, we asked of the businesses. Impact of rise in electricity cost on businesses. We can see larger percentage. What do we have? 65 and 77% of businesses saying that they have had moderate to severe impact. The electricity costs have had major. 36% said significant, 12% said severe. So 50% roughly of the businesses say that there has been severe impact, significant to severe impact on their business performance and the execution of their businesses. So what have you done? We asked them. What actions have you taken to respond to the rise in electricity costs or in energy costs? Well, they say they've reduced energy consumption, very much like what the consumers told us. 27% said they have installed renewable energy solutions, example, solar. They have increased the prices charged to customers. So consumers are, I guess, beginning to feel or should begin to feel the impact. They have reduced operating expenses elsewhere, invested in energy-efficient equipment, and delayed investment on expansion plans. So these are the various impacts the various actions that have been taken as a result of the rise in energy costs. It does, in fact, speak to action and proactivity to a certain extent on behalf of businesses in seeking to counter rise in energy costs. So, what do you think are some of the policy measures to help businesses manage rise in energy costs? Again, like the consumers, they say low electricity rates, greater competition in the energy sector, tax incentives for renewable energy investment, and reduced import duties on energy-efficient equipment. So these are the things that they believe should be done to help businesses manage rising energy costs. Very interesting sets of responses, again, all spontaneously generated. We said, what do you think should be done? And these are not given to them, but given to us in terms of the responses. So, very interesting set of data. We hope you have found it so. We're always excited to look at the data, and we're all excited to see what comes out, what is coming out of the data as we're processing it. And we found that this one is particularly interesting. Business confidence up a little bit. Consumer confidence down for understandable reasons. They're still trying to recover from Melissa. Okay.
Thank you.
Thank you very much for listening.
Thank you very much, Don. quite a lot to unpack there as usual. The business confidence is no worse than it was before, given the headwinds that we have seen. In fact, it has improved slightly. So without further ado, I'd ask Don the first question. What, in the survey, would have been the reason why the business confidence is really no worse, or it has held its own quarter over quarter, given some of the things mentioned there, the factors that influence confidence and the energy challenges, the cost of running businesses, etc. What would have been the one or two things that people point to? I remember I see that question before where the response is people said they're just being optimistic, but I'm sure in this environment it's probably more than that. So what are you seeing done in the survey?
Well, you know, there's a certain school on North Street, won't call which one, that has a motto that talks about falling but not yielding. And I think that probably, it just came to me, that probably is a good way to look at this particular response, because what the businesses are saying is that we know we're facing challenges, we're on an uphill trajectory so to a certain extent, but we're in there for the long haul, you know, and therefore we are resilient. We're also saying that, you know what happened? We're going to have challenges, we anticipate challenges, we anticipate headwinds, but we are prepared to, in a way, roll with the punches, take them on the jaw, where have you, and proceed to really just do what we have to do. They're in there for the long haul, so it's, I call it the long haul syndrome, because they're just there. They say, listen, we've invested and we intend to be here for a long time, so let us put our house together, let us do what we can do, let us gird our belts, and just proceed to do what we can do best of all, and hope that the environment facilitates the kind of positive thinking that we have. Businesses are optimistic, long-term, and I think that's really what is accounting for the slight increase, in business confidence.
All right, thank you, Don. Jamie, is as the manufacturer in the house having to deal with these several different variables affecting the final product to the consumer, what would you say has happened to keep business confidence relatively stable against what we are seeing as, you know, significant short-term, medium-term challenges?
Well, Andre, businesses generally are realists, they're pragmatic. We are coming out of Melissa first in the last quarter of last year, then the uncertainty of the war with Iran in the first quarter of this year, and we operate as a going concern. We have to take that long-term view that we have to stay in business. Energy costs are but one variable that we have to plan against. And we do so by taking control of it and trying to innovate and stay ahead and manage those impacts. Ultimately, as we go through our planning, we're looking at our cost structures, we're looking at our sustainability, efficiency, competitiveness, because we have to stay in business. And that's the perspective we take. I mean, Jamaica in the global economy is a price taker for a lot of what we use and utilize in our businesses. And we just have to accept it. And, you know, the uncertainty in February of this year with the war, we've navigated that. We've further tweaked the adjustments we made after Melissa. And we're just trying to be as real as we can and practical and move ahead.
Thank you. Thank you very much. It's a huge challenge, but I applaud all the businesses who have managed and continue to manage in this environment and thrive in many instances, because the variables that are out there that are out of your immediate control must have some bearing on what you do. Jeremy, sort of similar, the high input costs, especially in your business, fast-moving consumer good, if you want to call it that. How are the rising costs influencing your decisions in terms of investment, pricing, etc., to keep FESCO as a listed company doing as well as it has been doing?
Again, good morning, everyone. For FESCO, our time horizon is a little bit different. We are a young company. We're just about 12 years old, or 12 plus years operating. We're building out our infrastructure and our assets. We operate in an environment, though we are the largest local fuel distributor, there's room for us to grow. Our market share is just around 12%. So our growth strategy is really around, adding new stations. Now, to add a new station, that's not a quarterly decision. A new station takes about upwards of 36 months to develop. So we have to keep developing stations or starting the pipeline to develop stations. So our time horizon is not a quarter-to-quarter decision. It's much more long-term and more strategic. There were a lot of things impacting Jamaica since about October last year with the hurricane, and then followed on with the geopolitical uncertainties in Q1, or the end of Q1, coming into Q2. And these geopolitical uncertainties were actually very close to home. Venezuela, even Cuba. So I can understand the sentiment of consumers and for businesses in being a little bit hesitant. Sorry. But at the same time, we're all in it for the long haul. So what we have seen from an energy standpoint is transportation fuels, as it stands in Jamaica, or the transportation fuels being utilized are the most efficient transportation fuels. On the electricity side, yes, there is a movement towards solar. That is important. And because of the reconstruction, you will see a lot of diesel and or those type of fuels being used in construction sites, etc. So on the whole, I would say, for my industry, for my position in the industry, it's not necessarily more macro, it's more micro, industry specific and firm specific. Our strategy remains the same. We are investing, we'll continue to invest. There's room for us to grow. And I think that's evident in also other companies. And in addition to that, when you have rising costs of input costs, sometimes you can't necessarily impact that individual input cost. You have to actually look for efficiencies elsewhere. And I saw that show out in the numbers, Don, that companies are looking elsewhere to try to save costs. But I heard something online, and it's very true. You can't always focus on costs. You always have to focus on the top line. The real challenge for anybody is to grow and your revenues to deal with all of the cost problems. So the challenge, I believe, for any company like ours or anybody else's is to actually grow your revenue and your top line to be able to absorb and to deal with the costs.
Okay, thank you very much. Let's keep the revenue streams strong and consistent and diverse. All right, Mr. Siago, Maitre Siago, man of many hats today. I don't really have to ask you which hat to wear to answer this question. As an executive of the PSOJ, chairman of Petrojam, and of course, an established manufacturer yourself. The matter of managing costs, again, the high input costs, you can answer first as a manufacturer and then one of your other hats in terms of what is being done to sort of mitigate these costs and to minimize these costs to the end consumer.
So thank you very much, and morning everyone. As Jeremy said, sometimes we can't pass on those costs directly. As business people, we have got to look at the bigger picture. Yes, there are some costs that are high in Jamaica, but there are also some costs that we have had that have been traditionally low. Salaries, for example, depending on where you're comparing to. With that said, we have had, I think, in the short run here, we have had 2 increases in the minimum wage. These are things that affect your entire wage package. I think that we have to recognize that we're an island. We are surrounded by water. We don't have supply chain here. So we have got to recognize from the get-go in business that we are subject to the vagrancies of price increases worldwide when they happen when we have wars, when we have hurricanes, etc., and natural disasters. So these are things that we have to plan for. The PSOJ yesterday had a forum on how to plan for Melissas so that they don't impact us as deeply as they did or could have. So I think that, agreeing with Jeremy, what we have to do is know that they're coming and be more efficient. One of the things that we have to address as a nation is productivity. It's a buzzword, we speak about it a lot. How do we get more productive? We have to change our perception of productivity. We have to change our mindset around productivity. Not just our workers, but our management. Our management have to demand more, and our management has to do more. We have to train people better. We have to train people and let them understand what it means to be productive and who we are competing against. Because we're not competing against, Fesco is not competing against Rubis next door. Fesco is competing against the rest of the world. So is my company, so are all of us in this room. So we have got to change our mindset as a people. And the biggest mindset change that is required is within the government, because our government services and the unproductivity within the government is affecting all of us every day.
Thank you very much. Jamie spoke about keeping the revenue streams high, Jamie, in order to finance the expenses. Efficiency, Jamie, is where I want to direct you as a manufacturer as well. What sort of efficiency strategies is being employed in your group that can, mitigate costs and to positively affect the high input costs, particularly at this time, energy?
Well, Andre, you control what you can control. We prefer predictability and stability in energy pricing. We don't have that much control, but we can do other things. I mean, we switched our co-generating energy facility from heavy fuel oil to LNG. We introduced more efficient equipment and machinery to make better use of that energy. The steam, which is a byproduct of our co-generation, is directly used in our manufacturing. What that does, it creates some space for us to become more innovative, focus on areas that are going to deliver value to the customer through the value chain, and it has been working for us. Innovation and competitiveness help us deliver value to customers, and that's how you continue to grow that top line while trying to manage the cost as much as you can, as much as we can. So it's very important for us to kind of always be trying to find ways to be competitive, be more efficient, and innovate.
Thank you very much. Vetri, looking at the consumer now, managing the costs, fuel costs to the end user, what are the variables that we have control over? Speaking from the Petroleum perspective, I know that there are some subsidies out there already, but how does that mechanism work to ensure that, to reassure the consumers that all that is possible to do is being done to manage the cost to the end user as best as possible?
Andre, it's a very fair question, and let me say that at Petrojam we probably don't do a good enough job in explaining how the pricing method is done. And the rationale there is that it's very difficult to understand. When I was president of the JMA some 12 years ago, I went and sat with Petrojam and tried to understand how the pricing is done. And I'm happy for anybody who wants to find out how it's done to come and sit with us and understand. But it's not easy. Fuel costing is very complex. What we do at Petrojam is we take the U.S. Gulf reference price every week on a Wednesday morning, very early, the price comes out, and we add for the various things that we have control over. So there's about 4 or 5 things that we add to that price. Now, if that price comes out to more, up to 4 weeks ago, if that price came to more than $4.50, more than the price before, we would not increase the price more than $4.50. So there was a cap of $4.50 per liter on every type of fuel. We have 7 types of fuel that we sell. So what the government of Jamaica has been doing for many years is called a smoothing technique. So it levels out the price of the cost of fuel to the consumer, up or down over the year. And usually that account comes out at about level, where prices go up and down, but so that consumers don't feel it every week, we level out the price. We recognized when the war started that prices were going up in some instances up to $40 per liter. And Petrojam was feeling significant impact from that cost. To date, Petrojam has spent about 18 million US dollars subsidizing the cost of fuel. We had to go to cabinet, we had to ask for permission to increase it from $4. Cabinet gave us a cap of $12.50 that we can increase by. So the increase that the consumers saw last week of $12.50 is not a real number. The real number is significantly higher than that, but Petrojam is taking up any losses that incur. We are hopeful that when the prices come back down, we'll be able to reduce the price by less than the amount that it's coming down to catch up with that difference. I know that I've said a mouthful there, and it's not easy to understand, especially for people who are the users of it, who are not involved in it on a day-to-day basis. All I can tell you is that Petrojam is doing everything that it can, and the government, by extension, has to give us back that money, because the money has to come from somewhere. So the rationale for it is that if we were to move the prices where they should be moved to, it would be extremely inflationary. And the government, Prime Minister himself said, listen, inflation is very easy to go on and hard to come off. And that's why they didn't want to do it. So I hope that, in a nutshell, explains what it is we're doing.
Thank you, Metro. That is probably the most simplified explanation I have heard. I mean, I've spoken to several executives at Petrojam, past and present, and I take out my T-square and my calculator and everything, and still can't figure it out. But that was fairly clear.
Engineers, I'm not an engineer, so I'm trying to give it as I understand it, and I thought it was very confusing still, but I'm happy that it's clearer.
Well, if an executive from Petrojam can say that, what poor me must say. but thank you for the explanation. Jeremy, we always hear about the petroleum, the marketing companies adding their markups. Tell us about the relationship between the retail supplier and the marketing company, and what kind of flexibility, what's the nature of the relationship that determines what your gas pump says at the end of the day for us?
Okay, I'm trying to give you an answer which is not giving away the 11 herbs and spices, the recipe, and at the same time balancing. So there's a school from Heroes Circle that says, well, whatever you do, do it well, right? So it's a balancing act. All right, so the final price at a pump, in simplified terms, there are about a few elements to it. So one is the ex-refinery price, right? Again, the ex-refinery price, there's two. There's one from Montego Bay and there's one for Kingston. They're not the same. They're about 5 cents difference, they're about. Transport. Right. In addition to that, there's a transportation cost from taking it from the rack to the relevant service station, etc. And then there is the marketing company's cost, which is a margin which they would sell to the various gas stations, etc. And that is a recovery for all investments a marketing company does, plus the operating expenses. So that margin can vary and does vary. Then the entity that's selling the gas, actually the retail spot, which is the retailer or the dealer, has to put their markup on the product to be able to pay the various costs, including staff, electricity, earn a return, pay the mortgage, whatever it is that they use to finance the gas station in the first instance. So there are quite a few value adds along the way that determines the final price for the consumer. And that varies, from location. The transportation can vary. It can vary from how the investments that you've made in a gas station or the cost constraints for a gas station. Not all gas stations sell the same volume, employ the same amount of staff, have the same opening hours. So, hence, there are different prices that customers face depending on the region, depending on the station that they visit.
Okay. You again, Jeremy, investment in renewables now. Your stations across the island, what is their distribution in terms of investments in renewables? Same question for Jamie as well. Are we looking more towards solar and other technology now to sort of reduce your input costs, on a more something that you have more control over? We have heard clearly that the energy prices that come to you, the fuel prices that come to you, you have a little bit of flexibility, as both Jamie and Mitri have just mentioned, as Jeremy and Mitri have just mentioned. But what about investing in your own business now in terms of renewables? What is happening in that regard across the FESCO group first and across the Hypo Jamaica Broilers group?
All right, so many of our stations are investing in solar and have equipped with solar. Even at our recently opened Spanish Town Road station, FESCO Oval, we're going to open a homework center and a recreation field. We actually expanded the recreation center to host both on 17 and younger, and then up to 12. We realized that while we're doing it, that maybe it's not best to have 6-year-olds and 15-year-olds in the same space. But to efficiently do that, we took it totally off grid with solar. So we installed solar panels so that this investment in the Waterhouse community will be long lasting. It's not a one-off. It's something that is going to be. But in addition to that, for overall operations, yes, we're employing a lot of solar. In some of our locations, we do water harvesting. So we are interested in renewables and also, participated as a good corporate, as a good corporate citizen. What I also have to add to say is that technology has helped with security, right? And we have to thank the work of the government, organizations like yourself and the general public for bringing crime down. Security is a big cost for most businesses. And what I would say is that technology has allowed the cost of security to either taper off or to decline. And we're really happy about that. So I had to mention that as one of the cost measures that companies like myself have tried to employ to be able to withstand other costs rising. But yes, to answer your question directly, yes, we have installed solar at many locations, and we have an intent to increase our solar generating capacity at other locations.
Thank you very much. I'm happy to hear about the social investments, and certainly we have to have another full conversation, Rachel, at one point about social investments and its impact on the economy. Jimmy?
It has to be fit for purpose. As a manufacturing-heavy entity, the renewables and what's required for that doesn't really suit heavy manufacturing with high energy demands across, whether it's a processing plant, the feed mill, the hatchery. But we do have other opportunities for renewables. At our retail outlet at Hypro, solar projects are on tap there Same for our contract chicken farmers who use solar panels to power their chicken houses. So we look at the mix, we look at what's appropriate, and we invest accordingly.
Thank you very much. So we're transitioning nicely towards investments now, and investments in your own business. And Tishan Lindo is here, who is an executive with GK Capital, specialist in investments, of course. And just to take advantage of you being here, sir, thank you for being here with us. The survey seems to have found that many businesses are in fact investing in renewable energy and energy efficient equipment, while others are, delaying that because of the associated cost. What sort of investment opportunities does this create, not just for the businesses themselves, but for consumers as well, in terms of investing in the opportunity of lower energy costs? Ladies and gentlemen, Tishan Lindo.
Morning, everyone. Thanks a lot, Andre. Okay, so basically, I think we need to simplify it, and I think we need to dial back a bit. So let's look at Jamaica's situation. Yes, energy is high, everything is, we conceived high. However, let's look at inflation and start at the inflation number at 6.7% as at June. And what we try to do to our investors is basically educate them in terms of, the different investment tools that we have at GK Capital to get them on the right path. A part of that education is our recently launched GK Investor Intelligence, which basically gives our investors basically all the tools from our research unit at their disposal. So that is critical, education. I heard both Don and Jermaine speak about the long haul, which is important. And for investors also, we're trying to educate them to not only look at investment from the short-term perspective where you have the spike and everybody wants to go in, what's trended, no. But let's look at the long haul. And with that, which we simplify it. And the first tool that we want to go to is our mutual fund, basically, where you have inflation at 6.7%, but we have a mutual fund that's giving you in excess of 15%. So we try to simplify it for our investors and give them a product which is keep them above inflation. So we start with the mutual fund, which is our growth and income fund, which is the #1 fund in Jamaica currently, which currently is at about 15%, which is a yield of about 8% above inflation. So that puts our investors on the right path and keeps them in a positive light. Then for more sophisticated investors who want something more sophisticated, probably something on the international sphere, what we do with them, or what we do is we sit with them and have a one-on-one and design a portfolio for them. And we'd probably want to look at, probably some US options in terms of some ETFs or some, and a few sectors that we'd want to look at. In general, it's probably just as the S&P 500, which basically, if we're talking about returns, year to date is at about 9%, which still puts you above inflation. The 1 year return is at about 18%. And we can also look at a few sectors like energy, which we're talking about here, AI and semiconductors, which, if we design a portfolio for you with a combination of stocks, bonds, based on your risk horizon, we can get you where you want to get. So at GK Capital, we have all the tools available, starting from educating our clients with our research tool to sitting with them, designing a portfolio that will keep them above inflation and put them on the right path. Thanks a lot, Andre.
Thanks, Tishan. Don, could you just reconfirm for me what sectors of the economy, that new slide that we added about 10 quarters ago that speaks to what sectors of the economy are looking to invest in the next year in their businesses, so that we can get an idea of what Tishan is talking about and what sort of companies would be looking to benefit from this.
Yeah, where there are a number of sectors that talked in terms of going into more investment, capital investment. The one that headed the list was agriculture, which included, of course, mining. That was the primary one. I think there were 57% of them said that this is where we were going. There was a new sector that we introduced, was education. And there were the two ones that stood out. I think everybody else was more or less in the middle 40s, but the ones that stood out were certainly agriculture and mining and the education sector. So people are thinking more and more in terms of wide range of education opportunities that they were prepared to explore.
Right.
Agriculture, again, was the one, and it was so in quarter one of 2026.
Agriculture. You that again, Jamie. So, Tishan, what sectors then would be best positioned to benefit from increased investment in efficiency, energy efficiency, renewables, and energy infrastructure?
All right, Andrew, thanks. So basically, we'll be looking at the energy sector. Locally, you have a listed company, FESCO, would be not bad. But on a whole, also, what I'd say, overall, if you're talking internationally, let's look at the S&P 500 and the returns that has given. And what I'd want to say is let's try to simplify it. I'd not want to be specific on a sector because investing is not a short term. And what we have seen throughout the quarters being here is that almost every quarter we're talking about a different probably inflationary pressure on the economy. So what we'd want to do is dial it back, keep it simple, stay focused, and be true to ourselves, look to the long haul, stick to the sectors that are the principles that we've been using. The S&P 500 has been good, as I said, and locally you have some stocks or some investment tools that can be used. So basically, in summary, Andre, what I'm trying to say is I don't want to be sector specific, but we'll be true to the mantra of what we've been doing, using the research to guide the principles at GK Capital, and that's the way we'd want to do it.
Thank you. Chairman Siaga, you did indicate that the government is investing heavily to subsidize the cost to the end user. Is there any discussions ongoing about private-public partnerships around financing that what seems to be a growing deficit?
Yes, but too early in the discussions for me to disclose anything. We are looking at, I think it's important for me to just make the point clear that certainly with me as the chairman of Petrojam, we are going to look at integrating Petrojam into all sources of fuel. We don't feel, my board doesn't feel that, we should be into gas alone or heavy fuel oils alone. We feel that LNG is something we need to be looking at. Solar we need to be looking at. Maybe even nuclear we need to be looking at. Whatever it is that is fueling the country, I think Petrojam should be in. And the second thing is that I think we need to integrate a much longer run, maybe even in some of the development of oil, if we do find oil in Jamaica, and or to the stage where we are selling fuels. So I think that Petrojam will take on a new look, and that is going to require investment for sure. And we are happy to look at the companies like GK to aid us in those expansions.
Thank you very much. I can say that the capital markets stand ready to participate in any initiative in that regard. Definitely. So we'll take two questions. Keith, I'll give you one and another one from the media momentarily. But before that, ladies and gentlemen, or gentlemen of the panel first. With more than half the households, reported trying to reduce their electricity usage, give us some thoughts, Jeremy first, of some conservation measures that will be practical that you use in your business and in your personal space as well that can assist Jamaican households in managing through this difficult period. So I just want some tips from each of the panelists as to what we can offer to our consumers and our business people in terms of managing the overhead costs that come with fuel prices?
Well, it might sound self-serving, but I would say cook with gas rather than electricity. It's far more efficient to cook with LPG gas than it is to cook with electricity. So, that's one piece of advice I'd love to share. Obviously, where you can, solar panels are useful, but I think, the one practical message would be cook with gas where possible.
Thank you. That's a very practical one. Okay, Mitri.
This may not suit Jeremy, what I'm going to say, but the truth is there's no good reason for households, let's start with households, to be paying high electricity bills when solar systems are available and financing is available for them. The payback period has come down significantly, and majority of the people that I know are telling me about their light bills being $12 and $15. So there's no good reason that people should not be putting solar in their homes. The second thing is that, and as I said, this may not suit Jeremy, but solar, electric vehicles are now coming to the fore, especially out of China. Don made mention of it in his report. I think that people have to look at hybrid vehicles for their transport. I think the government needs to start looking at hybrid vehicles for buses, hybrid and or electric vehicles for buses, for public transport. The whole landscape is changing, and people need to just stop doing what they've always done. My factory, for example, runs 50% on solar, and I'm now looking at trying to put the other 50% on solar. We just need to move with the times, and the times are saying just regular old fossil fuels is not the way anymore. We have to be creative.
Thank you very much. Jamie?
Well, Andrew, I'm a firm believer in controlling what you can, managing your consumption, but also investing in alternative energy sources. And certainly if persons are looking to purchase a home, property, capitalize the cost of solar in that, negotiate with your mortgage provider, include the cost of the solar system in the purchase price of the property. It's much cheaper than any kind of solar financing project out there now that you can get. And just negotiate to have that included in the acquisition cost. Over the long run, it's much cheaper. You'll see immediate benefits upon first use, and that's if you're acquiring property. If not, then you have to kind of look at, okay, how do I take advantage of what's on the market to have cheap electricity in my house? Same thing for energy, fuel for the car, manage your consumption.
Thank you. Thank you very much. Excellent insight there. All right, we have time for 2 questions from the audience. Keith, you have one or 2? See him over here.
A question for Metri. Metri, do you have any, coming out of the recent Mars Facey lecture by the Uruguayan energy expert, do you have any insight into the coming white paper on energy policy, sitting where you're sitting at Petrojam, and in view of what you just announced about energy diversification?
What I can say is in the public space already, Keith, which is that the government is committed to getting to 30% of its capacity in renewable energies. That commitment, I think the Uruguayan president has reconfirmed that to the government, that it's possible. And I get the feeling that the government recognizes that it's behind schedule and is going to look at some other sources now that we weren't looking at before. So I will say that because I can't say too much.
Okay, thanks for that. And for Andre, the there seems to be a quiet stealth bull market going on in the stock market, although no one, it's a kind of hated rally because no one really thinks there's even a rally. But the market is up about 16% and 8%, over 12 months, and 8% over the last, I think, quarter or so. Now, have you correlated that with again, it looks like a recovery in business confidence as normally, in the past anyway, there has been a situation where the business and consumer confidence index either correlates or perhaps sometimes precedes that rally. So I think this is a little different, and of course we've had a hurricane, so it is quite a different scenario than we normally think. But is that something you've looked at recently, and I know we might have observed that in the past, but I think it's because we've been in a 6-year bear market effectively, we've even forgotten that correlation.
Yes, well, that the management of the statistics we can speak about, but I think the question is better directed to the brokers, Tishan and companies here, who will have more insight into the order books and the financial positions of the various companies that they bring to us. We, as the facilitator of the matching the buyer and the seller, can just speak on the end result, but to look into the crystal ball, you really need to look more at the brokers. But yes, you're correct. There are more participants, and because we have more participants, there are more transactions. The volumes are increasing. That's all I would say at this time. But certainly there has been, and you are right, back in 2019, we know what happened with the business and consumer confidence indices, and the stock market indices were at an all-time high around that same time. So there is a correlation. Thank you for that. All right, we'll take one more question from the media. Going once? All right. The media is all completely satisfied, Mitri. All right. Certainly, this again has been a very informative session. I thank my very distinguished panel for their participation today. High-octane panel, yes. Led, of course, by Dr. Don Anderson, CD, Executive Chairman, Market Research Services Limited, Mr. Jeremy Barnes, Managing Director, FESCO, Mr. Jamie Ogilvie, Vice President, Jamaica Boilers Group, and of course, Mr. Mitri Siaga, Chairman of Petrojam, and other things. Thank you very much to our sponsors. Thank you very much to all the attendees here and online. And thank you to the Pegasus for the nice accommodation today. Thank you very much, ladies and gentlemen, and please continue to have a productive day and a productive week.